What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. It's the first time I'm doing a stock and dividend analysis on SPHD. I have discussed that stock. I have given you examples of what I have in my dividend portfolio with SPHD. I'm going to do a stock and dividend analysis. I'll show you at the end how many stocks I own with SPHD, and I'm going to show you why it's a good buy. And maybe if there are better ETFs out there, I'll show you two other ETFs at the end on stocks that might be better for your dividend portfolio. But first of all, make sure you subscribe, hit the notification bell so you don't miss future videos. Make sure you give me a like too, because I also put some time into this. So here we go. So here is Invesco SPHD S&P High Dividend Low Volatility ETF. Right now it is $33.84, and it has gone up, and obviously when the bug hit, everything has dropped down. So people are praising the stock, really discussing this on their dividend portfolio. People are doing lectures on it. People are showing why they like it, why they don't like it, why they're avoiding it. But let's see how it's done against the S&P. That's very important. When you have a ETF, basically, you need to know what companies are in there. I'll show you a video, that throwback video that I did way in the beginning before I even got monetized. It's a little screechy and stuff, but it gives you a good example of stocks to buy. I'm going to have it in the top right-hand corner, so make sure you check that out. But SPHD is a very interesting stock. I had in the beginning, I bought it, I sold it, I bought it, sold it, bought it, sold it, when I didn't really know what the hell I was doing. But now, since I have a strategy on my M1 Finance dividend portfolio, I incorporated SPHD, and I really like what I did. So in the past 5 years, it's been a little interesting. So here's the thing about SPHD. It is a high dividend, low volatility ETF. But again, in the end of the video, I'll show you another stock that you're going to be like, what? What is this one about? So the thing about SPHD, it is up and down, has some very good companies with it. I think it's a very diverse stock or ETF. We also need to look at the expense ratio on Invesco SPHD. That's very important. Anytime you have a exchange traded fund or a mutual fund, you need to know what the expense ratio is too. So let's look and see how it's done against the S&P. So right at this point, it has gone down in 2017. It's very stagnant against the S&P. So the mouth, as I always say, the jaw is beating SPHD. But why is that? We'll look into that in a little bit. But it was right in line with the S&P. So volatility wise, it's okay, but it's trying to follow the S&P. So that's one thing that you need to look into when you invest in stock, is how is it doing against the S&P. The S&P's been up 135.82% at its peak, and Invesco SPHD was up 72.62%. So that's not too bad. Let's think about that. It is going up, so that is a positive. But there are some things that we need to look into as well with SPHD and what this stock is about, why it might be going down a little bit. You need to, with an ETF, it's very diversified. It's not just one stock. Say like if you have the real estate sector, like when you look at my E-Trade dividend portfolio with EPR properties, those guys took a hit. Those guys took a big hit. I mean, their dividends are not even giving out dividends right now. That's a monthly dividend real estate investment trust. So let's look at their portfolio a little bit. So now we're on Invesco's SPHD, the website, and Invesco does a really good job showing the pie chart basically and the percentage of their stocks that they have in certain sectors. So this is something important that you need to look into. So 17.54% of their sector is utilities. People Corp, Duke Energy, Southern company Dominion Energy, Edison International, Pinnacle West, Capital Corp, Exelon, Consolidated Edison, First Energy, Energy Corp. So high percentage in PPL Corp and Duke Energy. So those are pretty good ones. So real estate, Iron Mountain. So I do own Iron Mountain, and they did take a little bit of a hit. So that could be why it's a little bit down with Iron Mountain. But the thing that's nice about Iron Mountain, it's basically a real estate investment trust. So anything medical, okay, I have papers, medical documents, it gets stored in Iron Mountain. And now they're trying to be like a cloud and all this database to store medical data. So Iron Mountain is adapting, which is good. Fernando Realty Trust, Health Peak Properties, Regency Centers Group, Federal Realty Investment Trust, Realty Income is 1.90%. So real estate and the energy sector, like the utilities, did take a hit during when the bug hit. Information Technology, Seagate, I do own those guys. IBM, which is a very good one. NetApp, Western Union, Broadcom, and HP Incorporated. So that's pretty good stocks for information technology. Communication services, Omnicom Group, Verizon, Interpublic Group, AT&T, and CenturyLink. So those are pretty good. I mean, AT&T's down a little bit. I mean, I do own those guys, but they do give off a nice dividend. So there's pretty nice diversification. And then Materials, Dow, International Paper, Amcor, CF Industries Holdings, Nucor, Eastman Chemical, and then consumer staples, Altria, Philip Morris, Kraft Heinz, Walgreens, Boots Alliance. That's not too bad. The energy, like I said, the utilities and some of the energy, the utilities and some of the energy sector, these guys did kind of take a hit. ExxonMobil, Kinder Morgan, Chevron, then consumer discretionary, H&R Block, Newell Brands and Hanes Brands. Newell Brands did take a hit. I do own those guys. They did take a little bit of a hit. WestRock in my dividend portfolio took a huge hit. Healthcare, Pfizer, Abbey, Cardinal Health. I can tell you as a nurse, I cannot tell you how many gloves we use with Cardinal Health in my hospital I work. That stock is on my radar. I'm going to be honest with you. Do not be surprised if I buy that one. Very good healthcare stock. Industries, 3M. 3M is like everywhere in the hospital, every product. Financials, Huntington Bank shares, and People's United Financial. Those are two good stocks that are they're not too bad at all. Huntington Bank shares, I did buy them in the past when they were low. So that's not a bad portfolio with their ETF, and it's not too bad. Let's look at the expense ratio. So based on that 0.30% expense ratio, that's not too bad. And the yield is 5.62% from what they updated on their information. Total returns down, so this is why I'm buying it, 23.69%. So that's one of the reasons why I bought them. So let's look at their dividend history now. So this is one of the reasons why I bought SPHD, is it has increased its dividend. Anytime you look at an ETF or a real estate investment trust or a monthly dividend stock or any stock, if you're a dividend investor, if you have an IRA or Roth IRA, you want to see increases. Now this went up and down a little bit with the volatility, but look at the way this has increased over time. Now again, the bug is an issue, but you're seeing 10 cents to 11 to 14, pretty much stagnant at 15. This is what is good about this stock. So it has gone up. Look at the beginning. So 2014, 8 cents. 2020, 15 cents. Okay, so it is going up. So that's what you want to see when you are a dividend investor. I had a lot of shares in these guys, and I felt very good about investing in these guys in the past, and I will plan on buying more shares of Invesco SPHD. But let's talk about two stocks now that it might be a turnoff with SPHD, but these other two stocks might be a little bit better with your dividend portfolio. And we're going to discuss these two right now. Invesco low volatility ETF. Low volatility has done very well against SPHD, and its peak was up 114.26%. The other one was 68.06%. So Invesco, the low volatility stock, SPLV, has done better against SPHD. But let's look at the dividend history of SPLV. Okay, so the good thing about SPLV is it has increased its dividend over time. That is pretty attractive right now. The dividend is not too bad. Okay, it is going up. So as you can tell with the volatility, it's really kind of stagnant and it's not too bad. Let's look at the expense ratio of SPLV. Expense ratio is 0.25%, looking at SPLV's low volatility ETF. And this is what they're a little bit more with their holdings. They got Verizon, Clorox, eBay, which I do own eBay, Amazon, Cerner, Garmin, General Dynamics, Hormel Foods, C.H. Robinson, Worldwide, Dollar General. Those are, they don't go up and down as much. So I do own Hormel Foods. What a great stock. These stocks are pretty stagnant. You know, they slowly go up. So that's understandable. So if you're if you have an ETF, if you have a Roth IRA, and you want to be a little bit less, you want to see growth, this is a really good one to look into. Let's look at one more before we discuss that could be better than SPHD. This is Wisdom Tree DGRW. It's a dividend growth stock by Wisdom Tree. It has gone up 101.46 to 57.42. So that's a very good stock out there. Let's look at its dividend history and its expense ratio. We always want to look at those two, like I said before. So this one's a little bit of a scatter bomb. It's just 0.10, 0.08, 0.12. I mean, it's a little bit of a scatter bomb with this dividend growth. So it has done well against it, but it's a little bit of a scatter bomb. 1.37 dividend yield at the moment. So as of right now, the expense ratio is 0.28% as of 8/4/2020. So the expense ratio is a little bit higher in SPHD. It's 0.30%, but the 0.28 expense ratio is not too bad. But I mean, there's two pros and cons. I mean, the expense ratio is cheaper. The dividend history is not as big as SPHD, but it has beaten the SPHD, and it has growth. It has grown. So let me just show you on my M1 Finance dividend portfolio how I'm doing with SPHD, what I plan on doing with my fractional share portfolio before I sum everything up. So as of right now, I have 13.71 shares. If I can get to what I plan on doing with my M1 Finance portfolio is a lot of my monthly dividend stocks, I do want to get a lot of shares in them. That way I can start doing some damage and I can start buying these stocks once everything goes up. So in the matter of 6 months, I plan on switching it and flipping it and letting my quarterly stocks take over. Look, I do have Seagate with SPHD. I do have 3M. And this is what based on my strategy, I feel very confident that SPHD will increase its dividend over time, and it will rebound once the economy starts getting better. So I will continue to buy shares with SPHD and let those dividends pave the way for these future stocks that I have. And there I am with Iron Mountain right there. So Iron Mountain's a little bit down, like I discussed in my video. but let the things, look, it's a monthly dividend. It'll do well. I just give it some time. I probably need about maybe about 2,000 in it, $2,000 in SPHD before I really start doing some damage. So, if this bill comes in, the second bill, I'm going to throw it in here and let these boys do the job for me, SPHD and QYLD. So, in summary, I think SPHD is a good stock. It is down. Again, I'm not a financial advisor, but I will continue to buy stocks in SPHD. SPLV and DGRW are a little bit on my radar, but right now I like the way SPHD is cheap. I know the expense ratio is 0.30%, but it does have some stocks that are volatile, and there's some stocks that I have in my dividend portfolio, as well as the Matt Ramey method that I had before. So I'm going to continue to hold these guys. I like this stock. I like it better than SPLV at the moment in DGRW. One, it's cheaper, and two, I need to capitalize on the opportunity with it being down because I don't see Exxon being down or these other stocks being down. So, the energy and some of the other ones took a hit. So, I need to capitalize on SPHD. I need to get at least maybe get 100 shares. So to let things start flying and go from there. So, but I do feel really good about these other two stocks. They are good stocks. If I make a little pie chart or anything within a pie chart with monthly dividend stocks, I am going to add SPLV and DGRW. I think diversity is a good thing, but right now I love SPHD. I love what's going on, and I'm going to let things fly from there. So, in the future, once I get to 100,000, have a little section with ETFs that give off monthly dividends and some good quarterly dividends like Noble and VYM. Maybe I'll add VYM in that, who knows, earlier, but that's what I'm looking at right now. So that's in my future plans with these two stocks, but I like SPHD right now. My goal is to hit $1,000 to $3,000 a month on my monthly dividends and $2,000 to $4,000 a month on my quarterly dividends. Very rational, very realistic. I just need to keep on reinvesting these stocks, let the things fly, let it get stronger, and then go from there. So I think it's highly possible. I think I'm headed in the right direction. Again, it's just going to take time. If I want $1 million or something, that would be right into my M1 Finance dividend portfolio. I'd leave it alone. I wouldn't want to spend anything. Just leave it there and let it do its thing. That would be amazing, but it's not like that in real life. I can't do that. I wish I could win multi-million dollars, but it's just not. Let's just be realistic. The probability of making more money investing in dividend stocks and getting things out of it versus buying a lottery ticket, I can't believe these people. They go to the gas station, they buy cigarettes, they buy booze, and then they buy lottery tickets. Those are three things that are probably getting the state of Ohio stable at once because of the taxes. So again, if you guys are new to my channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I really enjoy doing this video to you guys, and know we've discussed this on my wall all the time. QYLD, SPHD, great stocks that I like for my monthly dividend portfolio and my monthly dividend strategy. Things are looking good. The future is bright. Just got to take it slow and go from there. So thank you again, and you guys have a great Wednesday, and thank you for watching this video again. Make sure you give me a like, and let's make some money. So you guys take care and have a good one.